How's it, traders? Welcome back to Paradigm Flip. Hope you're all doing well. Today's video is going to be really interesting. We're going to be going over a live trade call that I had called on the 22nd of August, and I'm going to be breaking it down for you guys, showing you guys how you can also take part in high probability setups. We're going to be looking at what a high probability trade looks like and all of the elements that go into increasing the odds of a trade being successful, right? And this was actually in front of us today on GBP USD on a 5-minute chart, right? And this is actually a trade call that I called today, right? But this is not what we're going to be looking at. And if you actually want to follow my trade calls, you can actually join my Telegram channel. The link will be in the description below, and you can have a look at all my trade history there, right? However, today we're going to be looking at yesterday's trading day and the sell trade that I called yesterday. Okay, so a 5-minute chart is my standard chart for day trading. Okay, and what you want to do when you're day trading is that you want to put multiple factors of confluence together to build a story, right, that agrees with your bias or your direction or the direction you intend to trade. Now, the first element that I apply, right, to increase the odds of me getting my direction correct is I'm going to use trend, right? I'm going to always go with the higher time frame trend, right? And that itself gives you a probability. And to do that, you can simply use a moving average or market structure, right? Or whatever suits you, right? But anything that tells you the direction of the higher time frame trend, right? And you want to trade with that. So here on the chart, I've just put on a 200 EMA. Okay, and basically, as long as we stay below this and this slopes down, right, I can assume that the trend is lower, right, and I want to be trading in the direction of the trend. And that's the first element, right, that I'm going to be applying, right, and it's basically going to give me a first glance, right, view at the market, and instantly I'm going to know that I'm going to either be a buyer or a seller, okay. And the next thing we're going to be taking a look at are trade levels, right? So since we know that we want to be selling based on the high time frame trend, right, we need levels to key off of, right? And these are going to be your swing points, right? So you're going to be looking at previous session swing highs and swing lows, right, to understand where you can find your trade. Because if you are looking to sell, you basically want to sell, right, when a high has been rejected, or if you're going to be buying, you're going to be buying when a low has been rejected, right? And you're trying to filter out one side of the marketplace over the other, right, by looking for confirmations, right, in the direction of your trade, right? So if in this instance, right, we are looking to sell. Well, I was looking to sell in this instance, right? So I'll be looking for rejection of highs, right? That tells me that we have sellers at higher prices, okay? And when we break a low, we want the lows to be accepted, okay? And we will go through that. Now, once you have your swing points, now I usually draw out the most recent swing points or the ones that are closest to price because everything that is most recent, right, is what actually matters in the marketplace, okay? Now, another thing that I'm going to be looking at, I'm going to be looking at previous areas of distribution or previous areas of accumulation, right? And if you just look at the previous day's trading day prior to the 22nd of August, right, we would have seen this pullback or this reaccumulation area, right? Now, this area is significant because we did find sellers at this area. As you can see, it broke south of that area, right? So from this point, right, as long as we stay below this previous consolidation, right, we can assume that buyers, right, are actually losing money and sellers are actually in control. So what I usually do is I'll take the previous distribution, right, and I'll draw my fib over it and I will mark up the 50% of that distribution, right? And as long as we stay below that 50%, right, I can assume safely that sellers are still in control of the market. Okay, so that adds to my sell bias. Now, another area of importance that we want to mark up is an area of volume, right? So if I just take a look at the volume that occurred on the prior, right, prior to the 22nd of August, right, I'm going to draw a volume profile over that day, okay? And what that's going to do is it's going to mark up the areas of highest volume within that trading session, okay? And those are also going to provide levels that you can actually trade off of, right? And what you'll notice once we have our distribution, right, what this is areas of high volume or areas where the most trade has taken place, right, within this session. And we're going to mark that up and draw it out in time. And that's basically going to give you a strong resistance level, right, if we're below, or support level if we're above that level, right? So that's going to be a key level where you can expect trade to occur, okay? And one more level that we look at, right, or that we can look at is when we get the open, right? Now you'll notice that during the overnight session, right, price trades into this volume area, right, and into the 50% of the previous distribution and above this previous high, and we get that rejection and we attempt to trade higher from that area and we fail, and then we trade lower, right? From that point, we can see that price distributed. Okay, so this lets me know that price is, right, finding sellers at lower levels. Okay, and it's at this point, right, that I can assume to say that, okay, so there's a top being put in here, okay, because we have a rejection of a high, right, and now we are finding sellers at lower areas, right, so we can assume that price is going to continue lower, okay, right, and this is all before the open, right, but an important level that we're going to be taking a look at is the actual open, right, and if you look at this candle, right, I'm going to draw a level from the wick, right, the closest to the open, okay, that is the Frankfurt open, and that's also going to be another key zone to key off of, right? And you can see that this area, right, is marking the wick, and the wick is basically a pullback into this consolidation, right? So whoever was accumulating in this consolidation obviously was defending their entry as price traded into it, right? And that's why we got that rejection, right? So at that point in time, right, this provides a good immediate level, right, as price is developing, right, from the open. Now, those are basically the kind of levels that I'm looking at. And these are basically going to give you areas where you can actually take your trade and time your entries off of. Okay, once we see rejections of these areas. Now, one more important factor that we can add to give us confirmation, right, and also to time our trades is using intermarket analysis, right? And in this example, right, I used oil. Now, when I overlay oil over the chart, right, you'll notice something interesting, right? Oil is the blue line, and oil and GBP USD are positively correlated, and that's because the US dollar and oil are negatively correlated fundamentally. Okay, and what you'll notice is that during the overnight period, right, as oil dropped, right, GBP USD took out a previous high, right, and at that point, right, we saw rejection and it also dropped, right. So what we can see is that when you have two positively correlated pairs, right, one of them is gonna lead the other, right, in terms of direction. So if we are in a situation, right, where GBP is at new highs and oil is making lower lows, right, because these two are positively correlated, right, at some point one of them is going to catch up with the other, right, and because the bias is short, right, we can assume that if oil is dropping, right, GBP USD will also drop as well. Okay, now I actually took my trade, right, around this area, right, after the open, right, so we had that opening area, that zone that I drew out, and we had that strong candle away from the open, right? And when we pulled back into this previous consolidation, right, and we started to reject, at that point I noticed that oil was actually making lower lows and trading lower. So it was a very high probability that GBP USD would also follow suit and start doing the same, right? So around this area, I entered on a sell trade and I kept my stop at the high, right, to give it some wiggle room, right? And what we ended up having was GBP USD trading lower, right? And we took out the previous low and we ended up with a rejection. Now at that point, right, I wasn't too hasty to close the trade. I wanted to see how it would develop, right? And it traded higher back into this level, right, into the open, and we sold short, right? And price retested that area again and rejected again, right? But at that point, right, I'm noticing that oil is actually trading higher. So at this point, I closed my trade, right, knowing that there's a high probability that GBP USD would want to actually make new highs or trade higher, right, in line with what oil was doing. Okay, so once price made this low and took out this low, and I saw this rejection, right, I closed my sell trades and I actually took a scalp trade, right, from this area with a stop below this level, right. I actually closed the trade when this previous high rejected. Okay, and I saw that oil was actually starting to come off, right, because as you can see, as we trade higher on GBP USD, right? At that point, oil is now starting to trade lower, right? So once we took out this high, I had a strong idea that if we reject this high, this previous high, right? If we get that rejection, right, that could be the sell-off on GBP USD. And so I exited my buy position at this point, right? And I went short at this area and I actually kept my stop above the previous high. Okay, and oil indeed did tank, right? However, GBP USD stopped me out at this area, right? And we gave another rejection. Now, this is not something that I'm very concerned about because this is something that's very common. You'll find that very often that you'll get a series of fake outs, right? And this is how institutions or large funds accumulate positions, right? So if you get stopped out or faked out, as long as your trade idea is still valid, right? You shouldn't have fear about re-entering the trade, right, and getting back involved. And at this point, right, where I got the rejection, right? So if I just change the color, right? So we traded above that area. At that point, I'm stopped out and price then rejects. Now, at this point, if you look at where oil is all the way down here, right, at that point in time. So I'm thinking that if oil is so low, right, and GBP USD is so high, right, there's a very high possibility that GBP USD is going to catch up, right, or actually correlate, right, with what the US oil is actually doing. And it's at this point that I entered and I kept my stop above the high. So this was the re-entry point. And indeed, GBP USD tanked. Okay. And it initially reached exactly my target, and my target was around about the low of the day. Now, my target was simply a round figure level, right? And if you look here, this is the 1750 level, okay? And I basically put my target just below this area, right? Because if whoever is short in this trade, right, wants to exit their position, they're gonna have to do it at an area of liquidity, and that's gonna be a round number, okay? So I anticipated that price would stab that level, and indeed we did. And just have a look at oil, right? Oil creates a low, right? And GBP USD creates a low after oil creates a low, right? And these are actually some of the trade elements that I use, right, in confluence with each other to build a storyline to help me determine trade direction and to actually time the trade. And these are really powerful tools when all used together in confluence with each other. And we can actually just take a look at today's trading day, right? And you'll actually notice that it was somewhat the same idea, okay, right? The only thing that you didn't have on your side was the trend because this was a reversal entry, right? And the criteria is slightly different, okay? But however, if you just look at what oil was doing, right? Oil formed a low prior to today's trading day, right? And GBP USD went on to trade a little bit lower, and we rejected that low and we started to hold in this continuation pattern, right? Above the round level. And if you just have a look at oil making higher highs at this point, right? Oil is actually trending higher, okay, from the point of this consolidation, okay. If these two pairs are correlated, right, they should be doing more or less the same thing. So the fact that oil is making higher highs, right, we can also expect GBP USD to also make higher highs. And this is a powerful confirmation tool, right, to use in your everyday trading to help you time the trade and to actually help you pick the direction you should be trading in. And you'll also notice that after this consolidation broke, right, if you have a look at the area where we traded towards, right, we traded towards a round figure level as well, right, in the orange. Now we obviously spiked above it, and you'll usually get a stab of these levels, right, but ultimately right now we are holding that level, okay. And that's just some insight into my trading process, right? And what actually goes behind me actually picking my trades. And that basically brings us to the end of this video. And if you found value in it, please hit the like button, share it, and also subscribe, right, for future content. And if you want a trading community, you can join my Telegram group chat. The link will be in the description below, and you can stay updated with my analysis, right, and trade calls, right, in my Telegram channel. That's also going to be linked in the description below. And I really appreciate your time. I hope you found value in this. And until next time, cheers.